10 reasons why Warren Buffett is selling Bank of America stock. Reason number 1, modest revenue growth. Over the past 10 years, Bank of America's revenue has grown from $86 billion in 2013 to $8.3 billion today. That's a compound annual growth rate of just 1.4%. But what about profits? Here's where things get interesting. Net income has more than doubled in the same period, from $11.4 billion to $24.5 billion, representing a CAGR of 8.8%. While the profit growth is impressive, the slow revenue growth could be a sign that the easy gains have already been made, and future growth might be harder to come by. Reason number 2 is linked to per-share data. Bank of America's earnings per share, EPS, have grown from 90 cents in 2013 to 280 today, a 13.1% CAGR. This growth, boosted by stock buybacks, shows that the bank has been good at enhancing shareholder value. However, there's a catch. The bank's total debt per share has also increased from $27.90 to $42.60, with an annual growth rate of 4.3%. This rising debt level might be a concern for long-term investors like Buffett, as it suggests that the bank is taking on more leverage, which can be risky in uncertain economic times. Reason number 3, stable but modest profitability. Bank of America's return on assets is 0.8%, and return on equity, ROE, is at 8.5%. These are consistent with or slightly better than their 10-year averages, showing stable profitability. However, given Buffett's focus on long-term growth, these modest improvements might not be enough to keep him interested. Reason number 4 is solvency. Bank of America's debt-to-equity ratio is now 1.13, up slightly from the 10-year average of 1.06. Meanwhile, the debt-to-assets ratio has improved slightly to 0.09. Although the bank's leverage is relatively stable, the increase in the debt-to-equity ratio could be another reason Buffett is trimming his position, especially in a falling interest rate environment. Reason number 5, valuation. The current price-to-earnings, PE ratio, is 14.7, lower than the 10-year average of 16.2, suggesting that the stock might be undervalued based on earnings. However, the price-to-book ratio is slightly above the 10-year average, indicating that the stock is somewhat overvalued in terms of book value. For a value investor like Buffett, these mixed signals might suggest that the stock's upside potential is limited. Reason number 6, increased capital requirements. Banks are required to hold more capital to cushion against potential losses. While this makes the bank safer, it also limits its ability to generate profits, which could make Bank of America less appealing to investors looking for growth. Reason number 7 is interest rate sensitivity. Banks' profitability is highly sensitive to interest rate changes. Lower future interest rates can reduce the income generated from lending activities. This could hurt Bank of America's profit margins, especially if interest rates stay lower for longer. Reason number 8, the risk of a recession. Economic downturns often lead to higher loan defaults, which negatively impact banks' balance sheets and profitability. With current economic uncertainties, this is likely a significant factor in Buffett's decision to reduce his exposure. Finally, reasons 9 and 10 are rising expenses and a weaker outlook for fee income. Banks face increasing operational costs, including technology investments and regulatory compliance. On top of that, the outlook for fee-based income from areas like investment banking and trading is not as strong as it once was. Together, these factors create a challenging environment for banks, making their stocks less attractive to investors like Buffett. Conclusion. So, those are the 10 reasons why Warren Buffett is selling Bank of America stock. While the bank still has solid fundamentals and stable profitability, the combination of modest revenue growth, rising debt, increased capital requirements, and economic uncertainty could explain why Buffett is moving away from this stock. However, this doesn't necessarily mean Bank of America is a bad investment for everyone. It's important to consider your own financial goals and risk tolerance before making any decisions. If you're looking for stability and solid profitability, Bank of America might still be worth considering. As always, make sure to do your own research. If you found this video helpful, don't forget to give it a thumbs up, share it with others, and subscribe for more insights into the world of investing. Thanks for watching.